Welcome back, dear traders. InstaForex analysts are ready to share their vision of recent market developments. The highly volatile session on Wall Street ended with gains on Friday. The reasons behind market optimism were the news of Beijing relaxing COVID restrictions and hopes for the Fed softening its stance on a monetary policy. The benchmark stock indexes closed with moderate gains on Friday. The Dow Jones edged up 0.10%. The Nasdaq closed with the biggest growth of 1.88%, and the S&P 500 climbed 0.92% to close at 3,992. The New York pre-market was less optimistic on Monday amid the information background as euphoria among investors faded. The major stock indexes traded lower before the opening bell. The S&P is expected to trade in the intraday corridor between 3,890 and 4,020 points. The strong gains of Wall Street indexes on Friday enabled them to show the best performance in the last few months and recoup earlier losses. The S&P 500 logged the strongest growth for a week since June. The Nasdaq closed with the biggest weekly growth since March. The rally on Wall Street was triggered by the evidence that headline and the core inflation in the United States acceleration slower than expected. The CPI rose to 7.7% on year versus the 7.9% expected. Investors anticipated this signal from the Federal Reserve, which signaled that it would adjust further rate hikes to slower inflation. In effect, Fed's policymakers came up with the cautious comments. On a Monday, euphoria abandoned the stock market. In turn, the stocks of the companies with a mega capitalization, such as Apple, Tesla, Microsoft, Amazon, and Meta, lost ground in the New York pre-market. Federal Reserve Governor Christopher Waller is also to blame for the market pessimism. Markets should now pay attention to the end point of rate increases, not the pace of each move, and that end point is likely to steal away off, he said. Fed funds futures still predict at least an increase in interest rates by 1 percentage point from today until mid-June. Futures on Wall Street indexes traded in the red before the opening bell. Yields of US Treasuries and the US dollar regained their footing. Fed's policymakers sent a clear message that investors should not expect the central bank to soften its stance considerably. Nowadays, traders are betting on a rate hike of 0.50% in December. They predict that the ultimate size of the official funds rate will stand at 4.75 to 5% in May 2023. Nevertheless, large banks believe that the sharpest inflation bursts are over, albeit at the cost of a downturn in the US economic growth next year and another challenge on Wall Street. Morgan Stanley predicts that the S&P 500 will close this year roughly at the same levels as of today. The experts project inflation in the US to decline below the target level of 2% by the end of the next year. Goldman Sachs is on the same page with their colleagues. The political agenda on a Monday does not encourage market optimism. The Democrats confirmed better than expected results in the midterm elections last week. Thus, they retained control over the Senate at the weekend. At the same time, the control in the House of Representatives depends on some tough races on a Monday, which could bring the victory to the Republicans. Historically, the stock market has always benefited from the divided government. Since 1932, the average annual yield of the S&P 500 has amounted to 14% with a divided Congress and Democratic president. The yields equal to just 10% with both the Democratic Congress and Democratic president. So the political environment is not the most benign for the stock market. Another high-impact event is the G20 summit. The market is alert to the talks between US President Joe Biden and China's leader Xi Jinping. Any signs of some political consensus in the tense diplomatic relations are bullish for the Wall Street. This week is loaded with the macroeconomic data, the US Producer Price Index, retail sales, and PMIs. Besides, Walmart and Home Depot are due to report the corporate earnings later in the week. The US dollar perked up on Monday. Its index has rebounded from a 3-month low of 106.20. It has regained 0.50%, traded 106.80 today. The US currency enjoys positive fundamentals, so it might continue its recovery today. The intraday CAD is seen between 106.20 and 107.50. The signs of a decline in the US inflation were bearish for the US currency. Its index plunged by 4% last week, closing with the worst intraday result for more than 2.5 years. When hopes for the dovish Fed and the political gridlock helped the US dollar consolidate at comfortable levels on Monday. Remarks by other Fed's policymakers Lael Brainerd and John Williams are on tap tonight. Besides, the US dollar could find support from a gloomy forecasts unveiled at the G20 summit. The Canadian dollar is wound down by recovering US dollar and falling oil prices. The USD CAD pays a trading higher today, having gained 0.20%. The currency pair is likely to trade in the intraday corridor between 1.3250 and 1.3320. Though the loonie opened on an optimistic note today, this week is packed with important events for the Canadian dollar. Fresh inflation data is on investors' radars on Wednesday. Today, traders are anticipating a speech by Bank of Canada Governor Tiff Macklem. The loonie is trading under pressure from falling oil prices and green forecast by the IMF. The International Monetary Fund downgraded its outlook for the global economy. The IMF warns that Europe should be braced for the worst. Indeed, services and manufacturing PMIs signal weakness in most of G20 economies amid soaring inflation worldwide. The main reasons behind the global slowdown and monetary tightening by influential central banks, minor economic growth in China, persistent disruptions in the global supply chains, and a food shortage. So the IMF downgraded its forecast of the global GDP to 2.7% for 2023, against 2.9% in the previous forecasts. The green forecast pushed oil prices down on Monday. Brent crude and the WTI futures lost 0.7% and zinc to trade at $95.20 and $88.20 a barrel respectively. Meanwhile, the crypto market remains on a roller coaster. Bitcoin slipped below $16,000 on early Monday and rebounded to $17,000 later on. It has gained 4.1% intraday. Nevertheless, the token has fallen 18% this month, being on track to the sharpest monthly drop since June. Other popular altcoins are also gaining ground. Ethereum, Solana, Ripple and Litecoin have grown from 2% to 13.5%. Despite a large upward correction, the tokens are still far away from the levels of early November. The information background does not inspire any hope. Users of the FTX platform are trying all tokens to withdraw the money from the crypto exchange. Assets of FTX Digital Markets, a subsidiary of FTX, were frozen by the watchdog of the Bahamas Islands. Such news does not encourage optimism among crypto investors. Thus, the correctional rally is likely to be short-lived. Bitcoin is expected to trade in the intraday corridor between $16,200 and $17,400. InstaForex team wishes you profitable trades. Keep close tabs on financial markets on InstaForex TV channel. And see you online tomorrow.